Welcome to the Commercial Real Estate Show, your source for insightful analysis and enlightening discussions. Hello, I'm Michael Bull, your host. Thanks for joining us on one of the 42 radio stations around the country, on YouTube, on iTunes, and the show website, creshow.com. We appreciate you being with us. Well, today we're going to talk about retail and retail real estate. We're going to talk about the investment market, cap rates and trends there. We're also going to talk about the impact of the millennial generation, everyone's favorite topic. We're going to talk about feasibility for retailers and for new locations, and we're going to talk about some smart sustainability practices, something that's really coming back into play in the retail market. Well, let's start with Kevin Imboden. He is Director of Research with RC Analytics. Kevin, thanks for joining us.
Pleasure to be on, Michael.
Well, we appreciate it, Kevin, and you guys do a good job of tracking the investment market of all property types around the country. And retail has been real interesting. It seems like there's a surge of activity, at least in the markets in the Southeast where we work a lot. What did you see for transaction volume in the second quarter, and how's transaction volume trending?
So year to date, up to this point, we're looking at about a hair over $44 billion across the country. And so the question, of course, is, all right, how does that compare to previous years? And we're looking at a total of 88 last year and 64 the year before. So maybe a little behind last year's pace, but we're doing even better than we were in the pre-recession years. And splitting that out among property types, we're looking at a bit over 27 for malls and inner-city retail and close to 17 in strips.
Interesting. So are most of the volume, is it high-quality properties, institutional-type deals, or are you seeing some more activity in B and value-add and kind of redevelopment deals?
Well, we've seen many very high-quality assets trade of late and at very high valuations. We all know about that big deal in Hawaii with the Ala Moana Center. We had those two pension funds buy into that, valuing it at $5.5 billion. We also had several first-half deals in Manhattan that sold for really high prices per square foot. We're talking $4,000, $6,000, even $10,000 a square foot.
Wow.
There were even some deals in Chicago. There was a $3,000 square foot deal in downtown Chicago, and the Converse store in Santa Monica, over $6,000 a square foot. So some of these inner city properties that have good foot traffic, that have a lot of turnover, they're getting looks from big time investors.
Yeah, that is amazing. So what kind of cap rates are these properties trading at?
So we've seen this compression across retail since 2010. So starting back in 10, we're looking around 8s for retail. And we cut to the present day, and across all retail types, we're looking at about 6.5%. Now, how does that split out among the types again? Well, we're looking at under 6s in the inner city and the mall properties, and under 7s for strip properties. So how does that compare pre-recession? We're looking at the lowest caps ever for some of these high retail properties, because back then in 07, we were looking at mid-6s, so massive compression there.
Yeah, that's amazing. And some people that aren't in retail may think it's kind of the trailing sector, and they see some troubled properties. But boy, there's a lot of demand and a lot of properties that are doing extremely well, and a lot of interest in this sector. And I think maybe because there is a lot of upside with the lack of new construction and things. So how do you think all this is going to impact cap rates moving forward?
Well, I think I'm drawing on some of what the other sectors are doing. So if we're looking at the CBD office market, which has gotten so much investment, even more than retail, then we're looking at mid-5s at best in the top 6 markets of the country. In fact, probably going into the 4s. How about those mid-high-rise apartment buildings? We're looking at low 5 caps. So compared to that, actually some of these retail properties look like a good value. So there may even be the opportunity for a bit more compression, depending if certain assets come up to market again.
It's interesting. So we may see some more of these extraordinarily high prices per square foot because there's just a lot of demand in the retail investment market, right?
Well, absolutely, and I think some of this is driven by the move back to the inner city. As you had mentioned in your intro to the show, millennials moving back into the inner city, people are looking to change their lifestyle a bit more than they used to. Suburban living is completely passé now. So with this higher density, it's bringing the higher foot traffic, and some of these retail properties deserve a look.
Right. What do you think, Kevin, about future values of real estate? Now, we know we're talking about cap rates now, but let's talk about NOI growth, and let's talk about future demand based on interest rates rising. How do you think that's going to impact retail real estate values moving forward?
Well, when we're looking at financing across the commercial real estate sector, we're looking at financing at a lot of the time in the mid to low fours. We've done a study recently that showed that. So money is cheap right now. It's probably the cheapest ever, but if we're looking at a mid to low fours for an interest rate and a cap rate that could be around 6, well, there's a pretty decent spread there. So even if interest rates were to increase a bit, I think there's still room to grow depending on the quality of the asset.
Wow, so you think that we have great positive leverage now, and you think even if we go up 100 basis points on our interest rates, that for most investment properties you're still going to have that positive leverage, so you don't think it's going to have that much of an impact on cap rates or values moving forward for what, the next year or two? How far out?
Well, at least not to start. We try to not get too much into the forecasting side of things, but it does seem like there's a bit of space there. So I think we might be okay as long as it doesn't have a huge ratchet up immediately.
Well, come on now. I've seen you guys at the booth at ICSC. You have a crystal ball. You just get it out for certain clients, right?
Yeah. You're revealing the industry secrets here. We have to be careful.
So, Kevin, where are the hot markets for retail investment today?
So the aforementioned deals in Manhattan over the past year to date, so end of quarter two to quarter two this year, $6.6 billion is traded in Midtown retail, and that's a lot. And we're looking at caps through Manhattan to be in the low 4s now. So following that up, how about LA? LA, $6.3 billion, about a 5.5 cap across those properties. So in LA, it's kind of an interesting story because you'd always assume, based on the sprawl of the metro area, that would be mostly strip centers. But we actually have a pretty good amount of malls and inner city properties that have sold there too. It's actually outweighing the strip volume. Other boroughs in New York City, pretty good volume there as well. And Dallas has actually had a pretty good past year, which I think has surprised a lot of people.
Interesting. We're talking with Kevin Imboden with RC Analytics about the retail investment market. And Kevin, with all this good news on these low cap rates, this great volume and great performance really in most of these retail properties, is it time to build? I mean, I think one of the reasons that retail is doing so well is there's really been a severe lack of new supply. Is it time to build now?
I think given the right concept, it very well could be. Again, kind of repeating myself, but those inner city concepts seem like the way to go. Also, the mixed use type, if you can get that mixed use property that has a huge retail component, maybe some apartments mixed in, maybe some office, get people to stay after work and spend some money, that seems to be a good look. Building suburban properties, probably not what you want to do right now. So again, right concept could be the way to go.
Okay. And what about areas of opportunities, Kevin? If I have, $40 million or $2 million or somewhere in between there, where might I find some opportunities in retail?
So certain secondary markets seem to be a pretty good value right now, especially compared to some of these far-reaching tertiary markets. Some of these secondaries, you can get good retail properties at high 6s or low 7s. And what are we talking about as far as specifics? We're looking at Dallas, Houston, Memphis, Portland, maybe even Vegas. If you feel like gambling in Vegas, you're looking at a high 6 cap rate across all retail there right now.
Well,
so taking into account all those types.
Well, maybe it's not a gamble then. At a 6 cap, you finance it at 4, and we have improving, demand there, right?
Absolutely. There's been a recovery in that market, not certainly to how it was several years ago, but at least a respectable amount. And so instead of heading deep into these tertiary markets, these mid-secondaries look like a solid bet.
Yeah, I think that's a good point. There are some opportunities to go into these secondary markets and get some great values. Well, Kevin, thanks for joining us today. We appreciate you being on the show.
Absolutely. Thanks as always, Michael.
Well, we appreciate you being on, and reach out to RC Analytics if you'd like some information on any type of investment property around the country. They research office, industrial, and retail, and all sorts of properties. So do check them out and stay with us. We're going to have more on retail and retail investment market and retail performance. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you by Bull Realty Commercial Advisors, a great place to do business. Visit bullrealty.com. RealNex, a comprehensive and powerful suite of commercial real estate tools at an incredibly low price. Visit realnex.com. That's REALNEX. Xceligent, the resource professionals use for commercial real estate information. Visit xceligent.com. That's XCELIGENT. Commercial Search, the source to market and source available properties for sale or lease. Visit commercialsearch.com. For more information on these great companies or for additional videos, podcasts, or articles, visit CREshow.com.